think you're why I appreciate how you go about your investments. What I was going to say about those broader arcs is there are kind of three. This is my first big bucket of where investors, I think, often go wrong, and it's around thesis formation. So you can be thesis smart and market dumb, meaning I think the world's going this way. This is what's going to happen, but you aren't taking any sort of level of market feedback or signals. And so you kind of blindly invest in the thesis and you aren't pragmatic enough to acknowledge where you're at. I worked with an entrepreneur that was this to a T in his head. And I think you see investors this way, the $1 billion industry is there. I just need to make the bet. And you're like, well, let's not be foolish enough to think that, the world hadn't changed except that now you chose to kind of invest in this space. That's a fallacy. And that's my thesis smart, market dumb group. Then there's the market smart, thesis dumb. And those are the FOMA guys. Those are I invest in this because it's the Uber of that, or it's the hymns for, single dads, or it's the, whatever it might be. It's a shortcut on thesis because I'm going to where the money's been invested. You see this quite often in venture. It's like, well, that company, that fund has these in their portfolio. I need to have similar types of companies in the portfolio. Now, some of that is saying, well, hey, is the market heading there? So you can't be market dumb, per my first point, but you also can't just be soundly in the space of I'm going where the market is. So you have to have a thesis, a foundational viewpoint. Otherwise, you end up with Peacock. Peacock's an example, in my opinion, of a market smart, thesis dumb approach. It's saying, hey, the market's heading to streaming. We need to have streaming, but less of a detailed contemplation of a thesis of around how this is going to play out and how it's going to win. And I think that's kind of the second bucket. And then the middle is kind of, do I have a sound thesis? Where's the market heading? Not just in 3 years. And that's what I mean by thesis dumb. Thesis, not that you're an idiot and you're just choosing to invest in bad things, although that certainly happens. That's not the group I'm focused on. The group I'm interested in is the one that says, well, I see the market's been heading here for the last 2 years. I should invest in this space. I think that leaves you at only a kind of a 2-year, 3-year horizon. And if you aren't thoughtful enough around where you think some of the bigger moving details are at 5 years and 7 years and seeing how this is going to play out, then you're going to miss upside. And you're going to also inherently, you might not strike out, but you're not going to hit the kind of home runs you want to hit in venture. And I think you won't get the return. So the top returns in businesses I'm seeing are the ones that are actually have a view. I think the market's here in 5 to 7 years. And here's where we're at today, and here's how we get there. And so that's the blend of this kind of, you have to be thesis driven, but you also have to be pragmatic about where the market is. And so I think the first big bucket for me that I see, at least on the private industry side, is either is followers. And there's nothing wrong with being a fast follower. I'm never the first to think of any idea, but it's being a follower to an idea without a contemplation of how it plays out over 5 to 7 years. Because I think where that will end up playing itself out is in the third bucket I'll get to in a little while after I let you kind of respond, which is in how you actually manage and grow the businesses as a partner with them, which you do much more on the private industry side than you do on the public side. And so if you don't have a compelling vision and you don't have a thesis for where healthcare is going or where streaming might be going, how can you even dream of having a thoughtful view on why to make an investment in this business other than a bunch of other people are investing in it, which seems to me a really poor place to start and end.
Is that true of at every stage within venture, or is that you're noticing that more in the early stage, which you're saying, hey, that's a better strategy to have if you're, round C or D or
I think whatever. C or D, your time horizon is just shortened. So your growth equity funds are looking at your 18-month time horizon to, whether you're growth equity to IPO. So I think it's a lot clearer at that point what those businesses are like because they've had a chance to grow into the business and to see where it's going. Although it's still not entirely clear. I mean, we're seeing on the kind of capitation front in healthcare some really interesting successes that go public, but still unclear what the growth in that market looks like. And you're seeing even at the larger scale some faltering and failings.
Like what? Do you mind doing either one? Examples.
Well, I think you've seen some. Well, let's look at earlier vintage digital health companies that were anticipated to transform the way we thought about healthcare delivery, and which at least to my knowledge, my healthcare isn't really any different than it was a decade ago, outside of the science advancements. But you had businesses like Castlight Health, which were around transparency of shopping and pricing in healthcare, and it was going to somehow transform the way. Well, that business basically was exited. It's still publicly traded, but it's unclear what their thesis is. They had an original thesis, which is everyone should know their prices, but it ran into it was market dumb because it didn't realize why that was limiting in terms of who knows the prices and why those prices are distributed. But they just kind of exited. That business is floating along, and it didn't really transform or shift away anything. I think there's other examples in the capitation space around Medicare Advantage, although Clover, for a wide variety of reasons, hasn't succeeded for, SPAC reason issues and general principal thesis
fraud
issues.
Yeah, well, potentially fraud issues there as well.
And that's that is an example to me of thesis smart, market dumb, because I think it was a bunch of individuals who said, I see MA as growing, but then they chose to kind of completely throw out any acknowledgement of the need to actually build a traditional healthcare company, or at least components of a traditional healthcare company. We're just going to do it from scratch. And healthcare is now better off because we finally started to think about it. And, it's been broken until today because I haven't thought about it, was kind of the attitude I observed them. And then it failed for the reasons you would expect, which is they didn't really understand how healthcare worked. It didn't have detailed view on the market. They just said, MA looks like it's going to grow. We have technology that'll transform it. There's my brief thesis. And so those businesses haven't performed even despite a lot of funding that's flowed into them.